Working 9 to 5, what a way to make a living. Barely getting by. It's all taking and no giving. They just use your mind. They never give you credit. A lot of people don't know I love country music. I love country music. So if you know, you know. That's the one and only Dolly Parton. But hey everybody, here I am, Stephanie, with yet another video for you on one of my favorite topics, life insurance. So this video is actually going to be specifically in regards to life insurance through your 9 to 5, your employer, your job. Okay, so if you want to watch it, stay tuned. We got some good stuff today. Okay, so first things first, I want to just say, if you have life insurance through your job, congratulations. Great, wonderful, that is amazing. Kudos to you. If you have life insurance through your job, great, that is awesome. Now, I'm glad that I said that, because now I want to let you know why it is vital and very important to always have a separate policy outside of your job, your employer. Okay, first things first, you are not the owner of a policy through your employer. Okay, so when you have life insurance through your job, it is called a group life insurance plan. The employer basically chooses everything in regards to it. So you literally get to choose the beneficiary, and that's it. So the downside of not being the owner is that you don't have the ability to make the necessary adjustments to your own policy. So the employer gets to control everything. They get to control how much your family receives in the event you pass, and of course if you're still working there, in the event they get to choose the death benefit for you. Now, there are employers where they give you the option to get extra insurance, but that is also an extra cost, but it still falls under the employer. Okay, so nothing is really up to you in that situation. It's really all decided by the employer. Okay, so that's the first tip. The second thing is life insurance through your employer is 95% of the time term life insurance. Okay, it's term. What that means, of course, it does not last the duration of your entire life. And also the amount. The amount can range anywhere from $10,000 to $30,000, maybe the max even being $50,000. Now, that might sound great, but life insurance, the rule of thumb is that you should always have at least 10 times your annual income. So if you make $50,000 a year, you should at least have $500,000 in life insurance. Now, every family is different. Every situation is different as far as how much life insurance you should get. But if a single individual, you might want to have a certain amount. But even planning for your future, if you know one day you want to have a family, you might want to start and have a little bit more coverage. Okay, but for a family of, a family of 5, and let's say the spouse is not working and you have children, $10,000 to $50,000 is nothing. Nothing. It's something. Something is always better than nothing, but 10 times your annual income is what's always suggested. Okay? So that's the second thing. Now, the third thing is one of my huge PSAs. This is very important, and I don't think a lot of people know this, and it's vital in regards to life insurance. If you get laid off from your job, you quit your job, you're fired, you become ill, or even if the company shuts down, that life insurance goes right along with that job. Okay, so if you were to leave your job, you no longer have life insurance. Okay, so even if your employer pays a percentage of the premium and you pay another percentage, or even if your employer pays 100% of the premium for the life insurance, if you leave your job, if you're fired, or even if your job shuts down, and we know these jobs ain't loyal, that insurance is gone. Okay, so now you have no coverage. So now you have to literally start from scratch. Now, I will say there are instances when certain employers allow you to transfer life insurance to your next employer, but that's rare and far in between. So most of the time when people have life insurance through their employer and they quit or they get fired, that life insurance lapses. It lapses, no more insurance, no more coverage. So if they were to die that next day, there will be nothing, no death benefit paid out to their families. Okay, so those are the key things when thinking about life insurance through the employer. You always want to have a separate policy outside of your employer life insurance, group life insurance plan, because it's just not safe to just have life insurance through your employer. Okay, so first thing, you're not the owner. You really can't make adjustments. Second thing is it's term. It's not enough. That's really the main question. Is your employer life insurance enough? Does it cover you enough? Which, no. And then lastly is if you leave that job, you no longer have life insurance. So that's why it's always encouraged to have separate policy outside of your employer, outside of your job. All right. So if you found any gems, if you found any value in this video, please give me a thumbs up. Please subscribe to this YouTube channel, Choose Life with Steph. Share this video if you have any questions, or you can you can comment, and you can subscribe. Okay, comment below. Thank you so much for watching this video. More to come in regards to one of my favorite topics, life insurance. So you guys have a great day, a great night, and a great life. See you guys later. Working 9 to 5.